And in our top business story, the Investment Corporation of Dubai, the Emirates Sovereign Wealth Fund, has reported increased profits of $7.75 billion or 28.5 billion dirhams for 2014, up by 62% on the previous year. In a statement, ICD, which has stakes or holdings in companies such as Emirates Airline, Emirates NBD, and Enoch, said that the positive results were driven by the group's core businesses, including an exceptional gain from the incorporation of Dubai Aluminum into the newly formed Emirates Global Aluminum, and by the partial disposal of the group's equity investment in the London Stock Exchange. ICD's revenues increased by 11%, up from $48.5 billion to $54 billion, which is said was driven by the group's subsidiaries, which operate in transportation, oil and gas, banking and financial services sectors. The group's subsidiaries' assets grew by 10% to $183 billion over the last year, with an increase in property, plant and equipment, including the purchase of aircraft by Emirates and the acquisition of the Atlantis The Palm Hotel during the year. An increased customer deposits base in Emirates NBD, as well as additional borrowings and lease liabilities to fund Emirates aircraft expansion, were the main factors that saw ICD's liabilities grow by $9.8 billion to $131 billion. A draft set of regulations to govern financial services firms in Abu Dhabi's new financial free zone, the Abu Dhabi Global Market, has been published for open market consultation. The first set of regulations aimed at governing non-financial companies setting up in the market came into force on June 15th, with the free zone announcing that it has begun accepting license applications from companies in the retail, food and beverage, and office services and supplies sectors. In the coming weeks, the Financial Hub will also publish further consultation papers that will be supplementary to the draft financial services regulations and rules, and will include specific rules regarding insurance. The draft legislation is comprehensive in scope, spanning the categories of regulated financial services and market activities, approach to management and marketing of funds and investment offerings, mandatory disclosure requirements, the market infrastructure system, market conduct rules, and AGGM's disciplinary actions and enforcement powers. The regulations also revealed that the Abu Dhabi Financial Zone will offer a zero-tax environment for 50 years. In a long-awaited formal response to allegations of subsidy and unfair competition leveled by the big three U.S. legacy carriers, Emirates Airline yesterday rejected the trio's claims, saying their charges are patently false, riddled with inaccuracies, conjecture, and legal misinterpretations. The full 388-page document was released to the media and public following meetings on Monday, where an Emirates delegation briefed officials from the U.S. Departments of State, Transportation, and Commerce on the airline's response. Emirates' move comes after the U.S. trio issued a 55-page report accusing the three Gulf airlines of collectively receiving $42.3 billion in subsidies. According to the report released on Tuesday, the U.S. legacy carriers launched an aggressive lobbying campaign in January in a protectionist bid to restrict consumer choice and restrict the growth of international flights to the USA operated by Emirates and other Gulf airlines. Sir Tim Clark, the president of Emirates Airline, argued that methods employed by the U.S. legacy carriers to discredit Emirates have been surprising. In its response, Emirates systematically disproves each of the big three's allegations, and it has received over $6 billion in subsidies, including fuel hedging subsidies, purchasing goods and services from related third parties at below market terms, disproportionately benefiting from airport infrastructure and user fee at Dubai International Airport, and having an artificial cost advantage through the structure of the UAE's labor law. The Dubai Land Department have revealed that property transactions worth 64 billion dirhams were completed in the first quarter, with 24 billion dirhams of this through property and land sales, and 37 billion dirhams was a result of new mortgages. The DLD figures also show that 11 billion dirhams of sales were for buildings and individual units, 8.4 billion dirhams of which was residential units, 2.2 billion dirhams for business units, and the remainder for buildings. The most popular areas for unit sales were Business Bay, where 1,202 units were sold for a combined 1.84 billion dirhams, and Dubai Marina. Of the 24 billion dirhams worth of land and property bought, 9 billion dirhams was bought by GCC investors, with 5.8 billion dirhams coming from Emiratis and 1.9 billion dirhams from Saudis. 3 billion dirhams was from other Arab investors and 12 billion dirhams from non-Arabs. Indians bought 3 billion dirhams of properties, British buyers bought 1.9 billion dirhams, and Pakistanis bought 1.4 billion dirhams. Iranians and Russian buyers rounded out the top 5 nationalities of non-Arab investors.